Welcome to your channel name, where we break down complex financial topics and show you how to navigate them. Today, we're diving into a topic that might surprise you: how inflation has, in some ways, benefited both the wealthiest 1% and the middle class. Inflation is often seen as something harmful, but there are aspects of it that have worked in favor of these two groups. We'll explore how inflation has led to wealth accumulation through assets, debt management, and even wage dynamics. The rich get richer. How inflation benefits the 1%. Inflation tends to work in favor of the wealthiest individuals, who are well-versed in using economic shifts to their advantage. The 1% often hold diverse portfolios that include assets like real estate, stocks, and businesses. These assets tend to appreciate during inflationary periods. When inflation rises, so do the prices of goods and services, which in turn pushes companies to increase prices, leading to higher profits. This benefits stockholders, particularly the wealthy, who see their investments grow in value faster than the general price increases. Moreover, the 1% spread their investments across different sectors, helping them minimize risks while making the most out of inflation. Having access to top-tier financial advice also gives them an edge, allowing them to shield and even grow their wealth in ways that are often out of reach for the average person. Middle class gains unexpected upsides of rising prices. Though inflation typically brings financial challenges, it can also benefit the middle class in some unexpected ways. One of the key factors is forced savings through homeownership. As inflation drives up property values, homeowners see their home equity rise, even as they continue making the same fixed monthly mortgage payments. Over time, this increase in home value boosts the homeowner's net worth, creating a wealth-building effect without requiring them to do much. Additionally, fixed-rate debts like student loans or mortgages become easier to manage as wages increase with inflation, reducing the real burden of these payments. Middle-class families can come out of inflationary periods in a stronger financial position, especially if they own homes or secure stable employment with regular pay raises. The asset appreciation effect, a boon for both groups. Whether you're part of the 1% or the middle class, owning assets during inflationary times can significantly boost your wealth. Real estate, stocks, and commodities often act as hedges against inflation, growing in value as the purchasing power of money declines. For the wealthy, this means even more substantial gains, as they tend to hold a wide array of assets. For middle-class families, it's often their home that becomes the cornerstone of their wealth-building strategy. Historical data shows that real estate, in particular, tends to perform exceptionally well during inflationary periods. Take the inflationary period of the 1970s, when real estate and commodity prices surged. Even more recently, between 2019 and 2023, home prices in the U.S. rose by 54%, benefiting homeowners across the board. This asset appreciation helps both the 1% and middle-class families grow their wealth in real terms. Debt's silver lining: how inflation eases financial burdens. Another lesser-known benefit of inflation is how it reduces the real value of debt. As inflation causes wages and asset values to rise, the relative burden of paying off fixed-rate debts decreases over time. For example, a fixed-rate mortgage taken out today will feel much smaller a decade from now if inflation significantly raises wages and property values. This is beneficial for both the wealthy and middle-class families alike. Wealthy individuals who take on large debts to fund business ventures or property investments can pay these off more easily over time. For the middle class, inflation makes it easier to manage mortgages, student loans, and other fixed-rate debts. However, it's essential to watch for rising interest rates, which can offset some of these benefits. The home equity boost, a key to middle-class wealth. For the middle class, homeownership is often the most significant contributor to building wealth. Inflation plays a crucial role here by increasing home values, which in turn raises household net worth through home equity. Rising home prices during inflationary times can offer middle-class families a tremendous boost in wealth. Home equity can be leveraged for other financial needs, whether that's funding a child's education, starting a business, or reinvesting in the home to increase its value further. Historical data shows that home values typically outperform inflation, as seen during the late 1970s and early 1980s. When home prices in some areas doubled or even tripled, the same trends are evident today, with recent housing market booms creating significant wealth for homeowners. Investment returns, how the rich stay ahead of inflation. The wealthy often use sophisticated investment strategies to ensure their portfolios outpace inflation. These strategies typically involve targeting investments that generate positive absolute returns, even in high inflation environments. The 1% focus on investments such as Treasury inflation-protected securities, real estate investment trusts, and stocks and companies that can maintain high profit margins despite rising costs. This approach helps them protect their wealth from the eroding effects of inflation. On the other hand, middle-class savers who rely on traditional methods like savings accounts often struggle to keep up with inflation, underscoring the advantage that the wealthy have in maintaining their purchasing power. Wage dynamics. When salaries keep pace with rising costs. Inflation impacts wage growth, but not equally across the board. In sectors with strong labor demand or unionized workforces, wages often rise in line with or even outpace inflation. For higher-income individuals, wage growth is often robust during inflationary periods, enabling them to maintain and even increase their purchasing power. Middle-class workers may also see wage increases, though these tend to lag behind inflation, making it harder for them to catch up. This dynamic can contribute to widening the wealth gap, as those in higher income brackets benefit more from inflation-driven wage growth than the average worker. Inflation is a double-edged sword, presenting challenges while also offering opportunities for wealth building, especially for the 1% and middle-class homeowners. Understanding how inflation works and how it can benefit your financial situation is crucial to navigating these uncertain times. By making smart investments, managing debt, and leveraging assets like real estate, both groups can protect and grow their wealth. Inflation often gets a bad rap, but did you know it has actually made both the wealthiest 1% and the middle class richer? In this video, we explore how rising prices can lead to wealth accumulation through asset appreciation, debt management, and wage growth. Discover how inflation has benefited different economic groups and how you can take advantage of it too.